Hey everyone, Clayton Morris here from Morris Invest. Today I'm thrilled to share some exciting news that could make a huge difference for real estate investors. I'm talking mortgage rates today. It has been a wild ride over the past couple of weeks, hasn't it? As we headed into the beginning of August, an absolute crazy storm that's been happening. So let me say it's not all sunshine and rainbows as it relates to mortgage rates. It's actually kind of terrible news for Kamala Harris and what's left of President Biden. We'll get to that part of the story in a second. But first, the good news. Mortgage rates have dropped significantly in the past few days. And if you're an investor, this could be your chance to make some smart moves in this market. Look, I'm an investor and I actually like higher interest rates. I've talked about this on the show before because that means that I get great deals on properties with far less competition. A lot of investors sort of sit back and sit on their hands, and the investors that I like to hang out with, I like to call us smart investors. We don't care about interest rates. We will jump in if the ROI and everything makes sense from a financial perspective. But a lot of investors who've been sitting on the sidelines waiting to start investing in real estate will see this as an amazing opportunity right now to jump in. And good. I love investors making money and doing smart moves right now. And actually at my company, the new construction properties that we sell to our clients right now, we have an additional buy down credit. So the interest rates are even lower than the current market rate on top of what the current market rate is, which is great news. But let's talk about what's really behind this sudden mortgage interest rate drop. And I want to talk about the latest elements from the Federal Reserve and how big job layoffs are also playing a big role in all of this. So let's dive in. We've seen mortgage rates fall sharply in recent weeks, reaching levels below 6%. I mean, just look at this. FHA 30-year down to 5.81%. This is fantastic news for those looking to invest in real estate. Lower mortgage rates mean reduced monthly payments on new loans, which of course can enhance your cash flow, increase your overall return on investment. So ROI is helped nicely here. We cannot discount that. But why have interest rates dropped so suddenly? So to understand that, we need to look at this broader economic picture right now, and it's not good. This is where it's terrible news for President Biden and his replacement Kamala Harris, who's trying to run right now on a record of what? I don't know, but this is all happening on their watch. It's all about the employment picture in the United States, which has been battered. And of course, the corporate media won't tell you what's really happening. Millions of Americans are losing their jobs, and they're being replaced by illegal immigrants who are taking those jobs. Watch.
What about the recession? Are we headed to recession?
I believe we are. And Stuart, it's been the consumer. The consumer drives 70% of the market, and the consumer has been pushed to the brink, and we're starting to see that. Now, there's been this false belief that the strength of the employment market, that it had to do with the amount of employees that are being hired. What is in reality is that 1.2 million Americans, U.S. citizens, lost their jobs, which were replaced by 1.3 million foreign-born or illegal immigrants. That is U.S. labor statistics. That shows that the labor market was never as strong as it was, and a lot of the new jobs being created by part-time workers, it's never been as strong as it was. Now you're going to see layoffs, and there's going to be more carnage in the future, leading us to a deeper recession.
So illegal immigrants are a huge piece of this. Another big piece of this puzzle is AI. Yes, a lot of jobs being replaced by artificial intelligence, and those jobs are not coming back. So we are in a weird economic moment right now in the United States. That's why you're not hearing about this, though, in the corporate media. They don't want to be broadcasting under the Biden administration that a lot of Americans are losing their jobs and they're being replaced by millions of illegal immigrants who've poured across the border. That's the truth. They're not going to tell you that. Now, normally when we have this kind of volatility, this market volatility, which we've seen over the past week or so, the Fed jumps in, lowers rates, especially given the poor employment data, but they are not doing that right now. I mean, the Fed has chosen not to reduce rates aggressively, not to have an emergency rate cut, despite all of this market volatility. But we are still on track for an interest rate cut in September. So we are seeing these mortgage rates dropping right now without any rate cuts coming from the Federal Reserve. So that's actually great news. The Fed didn't budge, but rates came down anyway. So the main driver of these mortgage rate cuts is a weaker job market. Again, not good news for Democrats. This is because lower employment numbers generally ease inflation concerns, indirectly influencing mortgage rates to fall. Think about it this way. Think about it like this, right? The inflation concerns would drop because people are out of a job. Consumer spending rates dry up, prices fall. So you can see how this is a double-edged sword, right? This is good news for investors who are looking to buy real estate with good interest rates, but it's terrible news for those Americans who've lost their jobs. All right, but I'm going to try to focus on the good side, okay? I'm usually a glass half full kind of person, and I'm talking to a lot of you who are investors who are interested in jumping into real estate right now, rental real estate, and want to start adding properties to your portfolio, or you've been sitting on the sidelines for the past 2 years, right? Here are a few reasons that these rate drops should matter to you. Number one, improved cash flow. I mean, lower mortgage rates means you can finance properties at a lower cost. This can significantly improve your cash flow and overall profitability. And then number two, increased investment potential. I mean, with more affordable financing, you can then potentially acquire additional properties, right? More to your portfolio, or invest in higher value assets, buying something that's a little bit more expensive than you might otherwise be able to given these lower mortgage rates. And that's going to boost your portfolio's growth overall. Also, let's talk about market opportunities. Number three, lower rates mean also spurring increased demand in real estate markets, presenting opportunities to sell properties at premium or secure favorable terms. So if you've got properties in your portfolio you are looking to unload, this is also a great opportunity to reposition some of your market opportunity moves. You know, you want to jump into some different markets and you were thinking about selling off, but no one was buying for the past few years. Now's the time, right? And especially as we head into September, a lot of people or maybe are looking to buy a house, move into that new school district and so forth before September school year starts. That's another positive sign. Then number four, let's talk about refinancing. Maybe, these lower mortgage rates present a great opportunity to jump in and actually refinance some properties you've been sitting on with higher mortgage rates. So all good news. It's important though to keep this broader economic context in mind right now, because an increase in job layoffs and then a cooling job market are signals of an underlying economic challenge right now. I believe we are in a recession, and we need to be smart with our money right now. That's why I'm such a believer in investing in tangible assets like real estate and precious metals, tangible things. We'll get back to that video in a minute. But first, inflation is out of control and you've got to protect your money. Any money you've got sitting in your bank is losing value every day right now by around 3.5% to 4%. And if you want to protect your money and grow it, you need to put it to work by investing it. Now, I'm not talking about risky or volatile investments like stocks or crypto, which I like, by the way, but tangible assets that you can actually put your hands on, okay? And the best tangible asset that you can invest in right now is real estate. It's the number one hedge against inflation, and it offers some of the safest and highest returns. I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. Now, I got into real estate after learning that it was a favorite among the wealthy, and now I know exactly why. Personal experience has proven that it is the number one way to build and protect your wealth. I'm here to tell you that, folks. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build-to-rent model offers the most benefits by far. We're talking new construction, single-family buy and hold real estate, build-to-rent properties. They offer more tax benefits, fewer headaches than rehabbing an existing property. There's less risk. There's way less risk than flipping houses. And they're a lot less work than wholesaling houses. And they're less turnover and fewer issues than multifamily houses. When you invest in build-to-rent real estate, you're getting 4 streams of income: appreciation and equity gains, principal reduction in the mortgage, tax benefits, depreciation, and monthly cash flow, my favorite. Now, on top of that, you're using someone else's money, the bank's, to invest, while someone else, your tenant, is paying for it. That's just one advantage it has over other tangible assets like gold and silver. You can't buy gold with the bank's money and have someone else pay for it, can you? No, you can't. Plus, when you're strategic about leveraging, you get 4 to 5 times the assets you can invest in. And it's the only investment that gives you 4 to 5 times protection from inflation. My company, Morris Invest, along with the help from our team at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. Because we buy and we build in bulk, and then we pass our savings on to you. Makes it a lot simpler when we're building 40 properties at one time. We're able to buy 40 furnaces, 40 water heaters, and be able to pass that savings on to you. Now, we offer free phone calls to create a personalized investing plan. But before we agree to talk to you on the phone, there's just one thing you need to figure out. There's one number that you need to calculate before we'll even talk with you on the phone. It's your freedom number. Your freedom number is the amount that you need to fully replace your current income, but it involves more than your monthly budget. My wife Natalie and I created the Freedom Number cheat sheet after a brush with job insecurity and realized that we were tired of depending on our paychecks just to get by. And then we achieved financial freedom and now make more than we did at our jobs through the monthly income that we get from our rentals. Now, we'd love to show you how to do the very same thing. Now, I made a quick worksheet that walks you through the process of finding your freedom number, which you can download for free at the link below. And I'm also going to send you valuable content that shows you how to identify a smart investment, what it takes to become a successful real estate investor, what you need to get started, and where to get a strategy that best fits your goals and situation, and how to get free ongoing help. I'm going to send all of that to you, okay? So click the link below to get your freedom cheat sheet right now and start protecting your money today. So this drop in mortgage rates, guys, is pretty exciting. It's an exciting development right now for real estate investors. That's why our team has been extra busy with this week. It's actually funny, when we get a nice drop in mortgage rates, our phones ring off the hook in the offices. It's like it almost happens immediately. So our team has been extra busy this week right now with investors who've been waiting to jump in to start buying new construction properties. And also our new construction single family homes right now are being sold below the appraised value. Yes, we are selling them below market value right now. So they're getting a nice little bit of equity when they're closing on the property, which is nice. We always like to do that when we can. Anyways, guys, I'll have a link below if you'd like to book a free call with our new construction team, talk about what homes we have available right now. I mean, good news on these mortgage rates. Let's stay positive. Let's stay glass half full. And we'll see you next time, everyone.